Hey everyone, welcome back to the channel. Today we're diving into a stock that's been making waves all week, SoFi Technologies, ticker symbol SoFi. After a huge earnings beat that initially sent the stock higher, we've now seen back-to-back days of selling, leaving many investors wondering what just happened, and what comes next. In this video, we're going to unpack the full story. Why the stock jumped earlier in the week. What triggered the sell-off. Whether the $1.5 billion offering was a smart move or a red flag. And finally, whether this is a buy-the-dip opportunity or a warning sign for what's ahead. Let's get into it. SoFi came into this earnings week with plenty of optimism, and for good reason. On Tuesday, the company released its second quarter results for 2025, and the numbers were undeniably strong. Revenue came in at $858 million, up a massive 44% year-over-year, and well ahead of Wall Street expectations. Adjusted earnings per share came in at 8 cents, beating the expected 6 cents. That's a big deal for a company that has spent years trying to prove it could generate consistent profitability. But it wasn't just about top and bottom line beats. SoFi also showed signs of accelerating growth across the board. Loan originations totaled $8.8 billion, including huge jumps in personal, home, and student loans. Fee-based revenue rose 72%, a new company record. And perhaps most impressively, SoFi added 850,000 new members, bringing its total to 11.7 million, up 34% from last year. That kind of user growth, combined with improved margins and rising guidance, had investors excited. The stock surged as high as $25.08 on Tuesday, marking its best performance in months. But then, everything flipped. Shortly after the market closed that same day, SoFi announced a $1.5 billion public offering of common stock. The offering was priced at $20.85 per share and included nearly 72 million new shares, with the option for underwriters to purchase even more. And just like that, investor sentiment turned. In after-hours trading, the stock dropped over 6%, falling from the mid-22s back toward $21. By the end of the week, SoFi had posted 2 consecutive down days, closing near where it started the week, despite all the positive earnings news. So what gives? Let's talk about what this really means, and whether it's a red flag or something more strategic. First, it's important to understand why stock offerings like this often trigger selling. When a company issues new shares, it increases the total number of shares outstanding. That dilutes existing shareholders, meaning your piece of the pie just got a little smaller. SoFi's offering represents about 7% dilution to the current float. And that's not insignificant. But it's also not catastrophic. The key question is, why did they do it? Some investors immediately jumped to the worst-case conclusion, that the company needed cash and couldn't raise it any other way. But that's not what this looks like. In fact, SoFi is already profitable and has access to deposit funding through its bank charter. This offering wasn't about survival. It was about opportunity. And that brings us to the bull case. Let's look at the timing. SoFi announced the offering right after posting blowout earnings and right after the stock jumped to multi-month highs. From a capital markets perspective, that's pretty smart. Raise money when your stock is strong, not when it's under pressure. That kind of move shows confidence. It suggests that management sees more opportunities for growth and wants the firepower to pursue them, whether that's expanding loan capacity, investing in new tech, or even acquisitions. So yes, the dilution stings. But if that money helps SoFi grow faster, scale its ecosystem, or generate more revenue per user, then long-term shareholders could come out ahead. Now let's talk about sentiment. The market's reaction was sharp, but not necessarily irrational. In a high interest rate environment, many investors are skittish about dilution, especially from fintechs that already trade at elevated multiples. So when they see a big capital raise, the reflex is to sell. But here's where the smart money might be thinking differently. Despite the drop, nothing has changed about the core business. SoFi is still growing revenue at over 40% a year. It's still adding hundreds of thousands of users. It still has a bank license, a massive advantage in the world of digital finance. And it's still profitable. If you strip away the emotion, this recent drop looks more like a reset in sentiment than a breakdown in fundamentals. And historically, that's the kind of setup long-term investors look for. Now to be clear, I'm not saying the stock can't go lower in the short term. Technical levels have been broken, and some investors may be waiting on the sidelines until the offering is fully absorbed. But from a long-term perspective, here's what I see. A company that just crushed earnings, that raised guidance for the rest of the year, that took advantage of a rising stock to strengthen its balance sheet, and that's positioned as one of the most diversified fintech players in the market. Compare that to many of its competitors, which are still unprofitable or shrinking, and the relative strength becomes even more clear. So what's the takeaway? This week's sell-off was dramatic, but not unusual. We've seen similar price action before from companies that raise capital in the middle of a rally. The key is how that capital gets used, and how quickly the company can convert it into additional growth. If you're a short-term trader, this week may have felt like a gut punch. But if you're a long-term investor, it could be viewed as a rare opportunity to get in, or add to your position, at a discount, just as the company turns the corner towards sustained profitability. SoFi isn't perfect. There will be bumps ahead. But based on this week's numbers, and the company's trajectory, the big picture remains compelling. Let me know what you think in the comments below. Are you buying this dip? Holding your position? Or has this offering changed your view on the stock? If you found this video helpful, don't forget to hit that like button, subscribe to the channel, and turn on notifications so you don't miss the next update. Thanks for watching, and as always, keep researching, stay curious, and invest with confidence.